What we're going to talk about are closing costs and prepaid reserves. Here's something really cool to know. Of closing costs, only one thing do we control as lenders. One. But do you know who's responsible to let the consumer know how much money to bring to the closing table? We are. We only control one thing though. Like 20% of the total cost we control. Everything else is going to be a third party. So when you look at closing costs, what are my lender fees?
Paying everybody more.
No, I'm there are lender fees.
Oh, okay.
If you were to look at one of our loan estimates or one of our itemization fee worksheets, you'll see that we have a processing fee, we have a doc prep fee, we have a underwriting fee. I don't care if you work at Regions Mortgage, FBC, Mortgage Firm, Prime Lending, or Waterstone. Your lender fees are going to run you in today's day and age somewhere between $1,200 and $1,800. We have ours. If Barry or Putt were in here, they probably could tell me what they were. What?
$1,300.
Are they? Yeah, they're $1,300. When you add it all up, it's $1,300. Here's something I want you all to know. I got this from Ben Davis, but it's paramount. We charge people $1,300 to bring us their mortgage. Make sure we're giving them $1,300 worth of service. You know, just keep that in mind when you talk to someone that's actually going to do a loan with us. Now, we give a lot of people a bunch of free knowledge and information, and they never use us, right? Maybe they don't qualify, maybe they don't buy a home, maybe they just choose to go somewhere else because they stole from us our experience, our professionalism, and then took that to someone who's going to do it for cheaper. That's part of the game. But we control lender fees. Our lender fees here at Waterstone are $1,300. At some places they're $990. At some places they're $1,800. Ballpark, we're all about the same. And that's what I tell people. Look, we're the same. I might be $100 cheaper, I might be $100 more expensive. I promise you if I'm $100 more expensive, it's going to be worth it to you. So when I'm talking to them about their closing costs, they're going to have services. And the services are things like appraisal. They are,
Vacations, unemployment.
yep, the credit report. They have a flood check, or CERT we call them. I'm gonna say VOE, start learning the true sign of a profession is that you have your own language. In our world, you have to learn our vernacular, but that's for inner office. Please never, ever, ever, ever talk to the consumer using your language. There's nothing more frustrating as a consumer, let alone as someone who's helping run a mortgage company, that that's the service we give. That's what $1,300 a month buys, or $1,300 buys them.
Confusion, yeah.
Yep. So when you're looking at closing costs, you don't get our lender fees back. That's why they're a cost. Right? You don't get the processing fee and the underwriting. No, I use that processing fee to pay our processor. Use the underwriting fee to pay the underwriters. Use the closing fee to pay the closers. Right? These are built-in fixed costs to help keep the lights on and the rent paid. And hopefully some freaking fiber cable in this office so that our internet connection quits sucking so badly. But appraisals are part of this. You don't get your money back on an appraisal. And Beth, what we do to answer your question, we collect an appraisal deposit. Technically, it's just a deposit. You pay your appraisal on your settlement statement, on your CD at closing. We then refund you your deposit. So technically, you pay for your appraisal because we can do a loan for someone not collecting a deposit. It's not a best practice. It takes an act of God and David Holbrook's signature to get it, but we can. A flood cert, for those that don't know, a flood cert is where we go out, we pay $11 or $13 to probably First American would be my guess. And they're going to tell us, are you or are you not in a flood zone? If you're in a flood zone, you need flood insurance. If you're in a flood zone, it's an oh shit moment because flood insurance can be expensive. That added expense could impact your debt to income ratio. What's an abbreviation for debt to income ratio? DTI can impact your DTI. And if your DTI goes up, it could impact whether or not you qualify, or if you do qualify, but at what rate. Because mortgage interest rates are not fixed. There's 28 factors that go into pricing out someone's loan. It's a whole nother class. So back on services, flood cert and VOE. Disney, I got a Disney person right here, ex-Disney. So when we verify someone's employment, Disney uses the work number. The work number ain't free. They charge money. Okay, well, We kind of operate like attorneys do. Meaning, hopefully you've never had to have an attorney, but if you have, here's how it works. Your attorney's like, yeah, I'm $100 an hour. And then you're like, wait a minute, I got my bill. Why is it $237 when I only needed 2 hours? Oh, I had to send 3 faxes, and faxes are $7 a page. And oh, I had to do this, and that cost $20. Yeah, they pass along their cost to their client. We pass along our cost to our client. If we're going to get charged for a VOE, we're going to try to collect it from the borrower, right? Just because Disney wants to be turds and charge doesn't mean we should take the brunt of it, because Florida Power and Light doesn't. So you'll see services as part of someone's closing costs. All right?
Are those itemized, or is it just one?
Itemized. Yeah, it'll be itemized. We estimate, Jimmy, like $50. And the reason why we estimate 50 is because if we only estimated 20 and it came in at 22, we can only collect 20. So we collect 50, or we'll estimate 50, and if it comes in at 37, we're only allowed to charge what we paid. We cannot make money on it. We're not like a contractor does. Contractor tells you your plumbing job is $2,000, but really is only $1,500. The GC kept $500. If you didn't know it, that's how that world works. Title company. I'm going to teach you a little something about living and working in the state of Florida. We don't pick the title company. Very, very rarely. You know when we do? On refinances. Because I'll promise you this, no consumer knows a good title company. They're like, a title what? Huh? Who? Okay, so whenever we refinance, we typically drive that ship. When sellers list their home, I promise you a seller does not know a good title company. They ask their realtor, hey, where should we go? And the realtor will have a relationship like, look, I go to Southern Title, I go to Fidelity, I go to First American. So we don't get to pick the title company. Our buyers, our borrowers, they don't get to pick the title company. But we have to estimate for what the title company is going to charge. And title companies charge somewhere on the low end of $1,000, on the high end $1,500. Just like someone else I know, right? We charge somewhere between $1,000 and now, when you break it down, the title company may very well say, well, this is for the Florida Form 9 endorsement, this is for the title search, this is for the title exam, this is our closing fee, and the closing fee at First American may be $375, but the closing fee at Southern may be $550, but that's because Southern only charges $99 for a title search, and First American charges $200 for a title search. It doesn't freaking matter. You should know title fees are going to run you somewhere between $1,000 and $1,500. As again, a rule of thumb, just a general consensus. Like when to use another example, when we talk about lender fees, some companies will charge a $1,200 processing fee. And they're like, well, we don't have underwriting fees and we don't have closing fees. I'm like, yeah, but you have a $1,200 processing fee. My processing fee is only $525. But I'm going to hit you for $250 to underwrite and $400 to close. Does it really matter? No. Waterstone does not itemize for a tax service fee. Our competitors will itemize $78 tax service fee. Our tax service fee is baked into one of our other fees. Do I need to say that we're better because we don't charge you a tax service fee? No. It's all a matter of how we choose to do our accounting. At the end of the day, it's going to take us and all of our competitors about $1,000 to $1,500 in order to underwrite, process, and close your loan. Unless, this is where I got off on the whole interest rate thing, unless I wanted to increase your interest rate, which is what some lenders like RP Funding do, right? Instead of giving you a rate of 2.875, they'll go 1/8 higher. My math majors, what's my new interest rate? 3, yep. 2.875 plus 0.125 would equal 3. So RP Funding is like, oh, our rate's 3, but no lender fees. Where we're like, oh, our rate's 2.875, but we're going to charge you $1,300 in lender fees. They're not better, we're not worse, or vice versa. It's just different. It truly is just different. Now, clients should know the difference, and they should have a choice in the matter. You know, hey, look, do you want to save $18 a month and have your closing costs be $1,300 more? Or do you want to save $1,300 at closing and have your payment be $18 more a month? Statistically, I'm going to pay my mortgage off, refinance my mortgage, or sell my house every 7 years. Yeah, I love a bird in the hand is better than two in the bush. My granny used to say that all the time, right? Do I want the guarantee today, or do I want to have, this in the future? I want the guarantee today. Especially if I'm like super savvy, like Eric Cotter's with investments. What could I turn $1,300 into? Because I could probably turn that into $5,000 in 6 years. That's something called opportunity cost that we talk about in the business world and the finance world. Again, another subject, another day. I'm just trying to get through closing costs right now. So the title company, they have their charges. Their charges are things like the title exam, the closing fee, and nope, not there yet. The endorsements, because title companies issue a title insurance policy. So that insurance, title insurance, is insuring me, the home buyer, that when I buy this property, I'm the only owner. That no one's going to come out of left field in 3 years, 5 years, or 17 years being like, my granddaddy gave me this property back in 1990. In his will, that seller had no right to sell it to you. Whoa. I have an insurance policy called my title insurance that says if you come after me, I at least have an insurance policy that's going to cover me. Now, he may be right. Granddaddy may have bequeathed him that property in 1990. That seller may have had no right to ever sell me the property. My family and I may be packing our crap and moving. But I'm getting paid because my insurance policy said that when they insured that home, when they did their title search and their title exam, that there were no other owners, that I was the sole and rightful owner of that property that I was buying. That's actually what title insurance is. In Central Florida, typically the seller pays for a title insurance policy for the buyer, and that is why the seller picks the title company. If you pay, you pick. I pay, I pick. Again, I don't know about you, but I'm going to tell you how much title insurance is on a $250,000 property. It's about $1,300 to $1,500. Beth, you can pick if you pay. I don't care. I don't care if it's Southern. I don't care if it's First American. Asia works on a team that does a lot of builder business. Eric Putt does a lot of builder business. Just FYI, I'm throwing a lot at you today. Builders don't pay shit. So you get a loan through Lennar or KB Homes or Ashton Woods or D.R. Horton or any of these other massive builders, you're paying for everything. Just FYI, just know that.
So closing costs will be higher, a lot higher.
Yes, closing costs are higher. Now also, we live in the third largest state in the union. And some could say that, we may even be in like a multi-worldly state if you say Miami is its own living, breathing organism, right? We don't do everything the same. We have standard customs in Central Florida that are different than what they do in Dade County. And Broward County operates different than Dade. And Palm Beach County operates like Central Florida does. So there's certain costs. Again, this is an FYI. This is not a on the test type thing. Yeah, your first test is next week. You'll know that, right? No. Just know that when we're talking about closing costs, that there's a variable here. Closing costs in Miami are different than Orlando, Tampa, and Jacksonville. Closing costs in Fort Lauderdale are different than Miami, but also different than Palm Beach. And if you're looking at a map of Florida, it kind of goes Palm Beach, Broward, Dade. Broward, it's in the middle. Broward's costs, they're in the middle too. Just if you ever wanted to remember that. Up in the Panhandle, once you get into the 850 and the Central Time Zone, they operate different too. So again, it's FYI, just know that there's not a one-size-fits-all. There's nothing that is cut in stone, because if it's new construction, it's different. If it's in Dade or Broward, it's different. If it's in Collier, it's different. If it's in the Panhandle, it's different. What we're teaching you is the bulk of Florida is that I-4 corridor, right? It's kind of Sarasota all the way up into Jacksonville. And then even if we included our friends, we cut across Yeehaw Junction and 60 and we got over into Palm Beach County, we all kind of do things the same way. So again, good to know. So closing costs made up of title fees. Now we have government fees. Yes, you have title insurance on anything that you do. You have an owner's policy and a lender's policy.
About refis.
There's title insurance on everything you do. If we are going to finance something, we're going to demand that there's a lender's title insurance policy. And the way things work in the state of Florida, different than other states. The way things work in the state of Florida is title companies issue simultaneously. So it's called a simultaneous issue, lender's policy and owner's policy.
Okay.
So they'll charge the seller $1,600 for the owner's policy, and for an extra $25, you get a lender's policy too. Extra $100, you get a lender's policy too. And Jimmy, you're going to have to learn calculating title insurance. It's not $1,600. It's $600 for the first $100,000 they insure. It's $500 per 100,000 thereafter. There's a rule of thumb that we use, and I'm just like 0.6%. Like, what's my loan amount times it by 0.6%? But there's a whole Excel formula that you guys will learn one day how to calculate title insurance. Right now, I'm trying to keep it 30,000. I don't do a good job. I'm trying to stay at like 30,000 feet in the air here. So you have government fees. So government has 3 fees. The county charges you to record your mortgage. FYI, it's $10 for the first page. It's $8.50 for every page thereafter. Most mortgages are 9 to 19 pages. You do the math majors, you're about $90 to $250. Why are certain mortgages 19 pages and certain mortgages are only 9 pages? It's a legal document, right? So if you've ever seen a divorce decree or a contract, every yeah but, like yeah but this is another page or 5. So standard mortgage on a 30-year fixed is 9 pages. Yeah, but this is in a master community, and the master community has certain bylaws. Yeah, but inside the master community, there's another homeowners association. Yeah, but this isn't a 30-year fix, it's an ARM. So we have an adjustable rate rider. Yeah, but this has PMI on it, and there's a PMI rider. You could yeah, but, and get a legal document from 9 pages and 19 pages very quickly. So if you ever looked at one of our estimates, we're probably estimating $250 for a recording fee, because our job is to be accurate, but on the high side of accurate. Why? Because no one's ever called us angry at us because they brought less money to closing than we told them they would. No one's ever called us angry because their final payment came in 10 or 15 bucks less than what we told them it would be, right? So, and because if we said it was going to be 100 and it came in at 150, Waterstone has to eat that extra $50. And 50 bucks isn't a whole lot until you times it by 300 loans a month. And now all of a sudden that's $15,000. And now we have to lay 3 people off because we can't afford to operate and keep on taking those pricing sessions. And I don't want to pick 3 people to lay off, so I'll let you guys handle it, okay? Or we just estimate properly so we can continue to hire great people like you and grow our wonderful organization. Also part of the government fees, the state of Florida is going to tax you. Technically, the state of Florida taxes 3 different times, technically. There is a tax called the Florida document stamps on the deed, and here in Central Florida, the seller pays it, except new construction. In Central Florida, the seller is going to pay it, but not Dade County. Florida document stamps on the deed is 0.7% of the purchase price. So you're buying a $400,000 home. Anyone but Jimmy and Alex, because these are my 2 math majors, 0.7% of $400,000 is how much? What's 7 times 4?
28.
So how much? 2,800. Sam got it. Yeah. Ooh. Yeah. So is buying new construction more expensive? Well, we know right now on a $400,000 home, which that's about what a new construction house is going for, yeah, it's $2,800. Come buy my house from me for $400,000, and I'm paying that as the seller, because that's a standard cost paid by a seller here in Central Florida.
Wow.
So typically we don't see that as a buyer paid cost. So when we're talking rules of thumb, we're not factoring in that 0.7. But you guys should know that. as a true professional. Now, things we are factoring into that, whether it's the 6, 7, 8 number, right, that Eric through Ben shared with us, or the 3% rule, we are factoring in Florida document stamps on the mortgage, 0.35% of your loan amount, and Florida document, and then the intangible tax. For anyone in this room that was born after 1991, I call it the MC Hammer tax because you can't touch this. Right? It's intangible. Corny dad joke, but to me, to be intangible, you can't touch it. MC Hammer tax. So we, as mortgage professionals, tend to just say 0.55%. Oh, you have your mortgage stamps, tax stamps, 0.55% of your loan amount. But I want you to learn, technically, it is 0.35%, and technically, it is 0.2%. 0.35% is the actual Florida document stamps on the mortgage. 0.2% is the Florida intangible tax. It's, again, because we live in this wonderful state who does not charge us employment income tax, state taxes, like they do in New York, like they do in Illinois. We raise revenue. Anyone here familiar with a Florida bond loan? Down payment assistance? Yeah? That 0.2% goes to that fund. If you're a credit union, you don't pay it. Again, FYI, one day it's going to come up. One day Jimmy's going to be competing against ViStar, and he's going to be like to his borrower, I don't know what clown you're talking to over ViStar, but they can't even properly estimate because your Florida document stamps are too low. They don't pay them, credit union. For now. Good to know. Not a need to know. What you need to know, other things that we haven't factored in that could be a cost out of your pocket. Someone had run it out. I'm just going to call it other. So, a little arrow up here. Write the word other. That's my cursive. They don't teach that anymore in school, but that's mine. You'd have a survey, right? Survey, they go out and tell you this is your property line, this is your neighbors, this is where the utility company can come and rip up your backyard if they needed to. So it's called an easement. How about a homeowners association? And how about a realtor admin? Because look, if you're paying cash, you don't have lender fees. If you're paying cash, you probably don't need an appraisal or a credit report. There's no VOE. There's no Florida document stamps on the mortgage if you're paying cash. Now, there's probably no recording fee. There is a recording fee to record the deed, but there's no recording fee to record the mortgage. So when you're financing your home purchase, cost out of your pocket that you'll never see again. Lender fees, services, title companies' charges, government charges, and these other things. Well, what's a realtor admin fee? It's where your realtor, I don't care if they're Coldwell Banker, EXP, Weichert, Berkshire Hathaway, Keller Williams, you name it. They're going to charge you somewhere between $199 and $499 administrative fee. We have processing fees, they have administrative fees. It's basically like, hey, I'm going to get my commission, plus I have to charge you this fee. Your realtor may or may not even get to see that money in their pocket. That may actually go to their brokerage. And each one is different. As a lender, again, remember what I first said? Like, this is all I know to be true and accurate. Like, the only thing that I have control over as a lender is that. I mean, I can't even pick the appraiser. Like, I can't negotiate that for you. This is all I have, but consumers and their realtors and the government and the regulators, they need me and us to be able to give accurate estimates, although I only control that. So we have to tell consumers, like, hey, look, because people, oh, I'm not paying that. Look, I'm doing my best to try to give you an idea of how much money you need and why, where that money's going. Check with your realtor. I know that most realtors charge something. A survey, I know that you're 99 times out of 100 going to need a survey. If you're buying a condo, you don't own any land, so there's no survey. There's a chance that the title company is going to use a survey that the seller already has and maybe not charge our borrower for one. Technically, and I don't know if many people know this, Eric, I bet you do, technically, we don't need a survey as a lender. We need the title company to issue us an endorsement on the title policy. Remember I talked about the owner's title policy, the lender's title policy that protects us against someone coming in saying that's not our home. We need a certain endorsement, an environmental endorsement that you'll never get a title company to give you without a survey. So to be a smart ass, a lot of times, it's kind of like the whole what came first, the chicken or the egg. When people say, well, the lender needs a survey, I'm like, actually, no, we don't. Actually, all I need is a Florida Form 9. I just know there's no title company in America that's going to issue a Florida Form 9 without a survey. So it's a technicality that, just to be a smart ass, I would probably say. So just know that other costs are surveys and homeowners associations. If you live out in East Orlando and you live in Eastwood or you live in Stony Brook, $1,000 is moving to their wonderful subdivision. You live in Winter Springs and Barrington Estates where I live, $500. Hey, welcome to the neighborhood, homie. Oh, cool. So there's certain neighborhoods that you have a capital contribution to the homeowners association. So these are all things that we have to factor for in closing costs. Now, you also have your prepaid expenses. So when someone buys a house, we're going to mandate, I need you to pay for 1 full year's worth of homeowners insurance at closing. Or before closing, however you want to do it. They can pay for it a week before closing. I find it's easiest just to have it on the settlement statement, have them wire one big fat number, one big amount, and then let the title company disperse it and make sure all the invoices get paid. But part of their prepaids is 1 whole year. We're teaching you guys acronyms, HOI, homeowners insurance. It's not a new number 7 at Bento Hoy. No, it's homeowners insurance. I never know if homeowners is one word or two. I write it both ways. Never hyphenated, but always one, either homeowners or homeowners. So you have to pay 1 year. There are certain loans that we will do that most mortgages, the consumer includes taxes and insurance as a part of their payment, right? We call that the help me out here. We have like an acronym we use. When we're talking about total payment, PITI maybe? Is that right? PITI? Yeah, PITI. Principal, interest, taxes, insurance. Most people, their payment truly is PITI. Principal, interest, taxes, and insurance is in case you have PMI or mortgage or monthly mortgage insurance. Some people, though, if you're special, putting 20% down, and you're like, I don't want my mortgage company paying my taxes and insurance. I want to pay it on my own. Okay, the term is you want to waive your escrows. You want to not have your taxes and insurance escrowed as a part of your payment to escrows to collect on behalf of someone else. Even those people, they still have to pay 1 full year of insurance at closing, even if we're not. But I would say, and Eric, correct me if I'm wrong here, less than 10% of our consumers are waiving escrows. Even people putting 20% down, it's just easier. You'll get the occasional hot shot that's like, oh, but I can be earning interest on that money. All right, buddy, it's like $5,000 a year. Good luck. Like how much interest are you really going to make on that?
Sales tip though.
Yeah. So I think that the lesson here is know that if you put 20% down, you don't have to have your taxes and insurance included in your payment. We still have to underwrite you based on your PITI. We still have to qualify you based on PITI plus HOA dues. HOA dues are never included in your payment, ever. Condo dues are never included in your in terms of like what we collect. It's included in how we qualify you. It's included when you budget yourself, but it's never something that we're going to pay. We as a lender, though, for 90% of our clients, we're going to pay the principal and interest. Well, we're going to collect the principal and interest plus a prorated amount of their taxes, 1/12, and a prorated amount of their insurance, 1/12, right? Because there's 12 months in the year. So if I collect 1/12 every year, then at the end of the year, I have enough money to pay the complete bill. So part of your prepaids is this, right? And the reason why it's called a prepaid is because we talked about already, you're going to pay this regardless if you pay cash or you finance. Now we're also going to need to collect from you what ends up being 2 months reserve. Let me make this one really big. Oh my gosh. Reserve of taxes and HOI, homeowners insurance. So if my HOI, no one calls it that, by the way, so if you leave this room saying HOI, it's like an inside joke amongst us. Homeowners insurance is $1,200 a month.
A month?
I'm sorry, $1,200 a year. How much is it monthly? 100. Right, we all agree it's 100? So if I have to collect 2 months of homeowners insurance at closing, how much do I have to collect? $200. All right, anyone not named Alex and not named Jimmy? My taxes are $3,000 a year. How much is that per month? $250. So I need 2 months of taxes at $250 a pop. So yeah, so you would end up with this equals, in this scenario, 200, and this equals 500. Now again, this is their money, guys. We're just gonna hold on to it. We're gonna hold on to it, and by the way, we don't pay them interest. Fun fact, in California, state law dictates that lenders have to pay California residents interest based on the money they make on the escrow account. Most states don't operate like California. Well, hell, California is kind of like Miami. They make their own rules.
That's interesting.
Great question. This gets paid to the insurance agent. We know that if today's closing is the 17th, your home is insured from February 17th of 2021 all the way through February 17th of 2022. If you sell your home in 6 months, your insurance company will reimburse you the difference. We just prepaid it. For the whole entire year, we know we're covered. So we have 2 months in reserve, but we're also going to collect as part of your monthly payment, which we call the PI, what again? PITI. We're going to collect every month 1/12, 1/12, 1/12. So when we get to next February, when your insurance comes up for renewal, we should have the 12 months we collected plus 2 months in reserve. Because do y'all know what just happened to Florida homeowners insurance? Doubled. It doubled. So as a lender, I don't even have enough money even though I have a 2-month cushion. How about this? What if you haven't been making mortgage payments to me? Because you're on forbearance. Do you think your insurance doesn't have to get renewed? Wait a minute. You're not making mortgage payments to me. That means I'm not collecting 1/12 of your insurance. Your insurance is due. It's $1,800 and you haven't paid me in 9 months. And if you can't pay me, do I think that you're going to be able to pay your insurance? No. Yeah, by the way, forbearance is a big issue for mortgage servicers. That's a lot of tax bills and insurance bills that they're fronting for their borrowers who haven't paid them for 9 months. It's more than just the principal and interest. So that is a reserve in case you go into default, in case they go up, in case you go into forbearance. It's your money that we're holding on to. And now look, we will eventually make good with you. As the mortgage lender, I'm gonna go and say, hey, Angelica, I collected $1,200, I had $200 in reserve and your insurance bill just went up to $2,000. I paid it, you're covered, because really I'm covered because your home is my collateral, but you owe me like $800 plus an extra $300 so I can replenish the reserve account, and oh, by the way, your mortgage payment's going up because I can't have this happen to me next year. I have to recalculate your mortgage payment based on your new insurance bill. Same thing goes for the taxes. That's why we collect the reserve, is for that. So to kind of wrap this up, because we do have a branch call here in like 10 minutes, total closing costs, when I'm talking to a consumer, I'm talking this number. How much damn money out of my pocket? That's all I care about. Don't geek out on me. But you want to be able to explain to someone that, hey, look, your closing costs are going to be roughly 3% based on your purchase price. Let me teach you something that I was once taught to me, 6, 7, 8. What does that correlate to? Now, part of that 3% or part of that 6, 7, 8, you're actually going to have closing costs and you're going to have prepaid items. And if you have 30 seconds, let me run you through them. You're going to pay me and my company money to process, close, and originate your loan. It's our cost of doing business. Here's the thing, I have great news for you. Our costs are like 20% or less of your total cost. Now, the government mandates that I estimate everyone else. So here goes. You're gonna have things like an appraisal, credit report, and a flood cert, or maybe even a verification of your employment. Whatever I pay, you pay. I don't mark it up. I'm not allowed to. The government says that's illegal. You're gonna pay the title company. Who's your title company? I have no freaking idea. You don't have no idea. I don't get a choice. You don't get a choice. The seller's gonna choose the title company. By the way, our government's gonna have some charges. The county's gonna charge you to record your mortgage, and the state of Florida is gonna tax you on your mortgage amount. Now, on top of that, you should anticipate paying some other charges. Things like your realtor may or may not have a realtor fee. I'm not your realtor, check with them. More than likely, we're gonna need a survey of your property. Surveys are gonna run you between $275 and $350. The title company will order that. We don't have to worry about ordering that. And depending on the neighborhood you buy in, you're gonna have homeowners association dues. On top of your closing costs, you're gonna have prepaid expenses. What are prepaid expenses? You're gonna have to pay for 1 full year of your homeowner's insurance at closing, plus we're gonna collect some money from you. It's your money. You get it back once you pay us off or sell your house, but it's gonna be your escrow reserve account. Basically, some of your money that we hold in case something ever happens, like your insurance goes up, your taxes go up, or you unfortunately can't make your payments for some unforeseen reason. We have some of your money sitting on the sideline to make sure your insurance stays renewed and the taxes get paid. The only thing I didn't cover on this, guys and girls, technically when you obtain a mortgage, you are going to pay the interest left in the month. Like, it's a calculation our closers come up with. It's how much is your daily interest, right? I know your payment is PITI, principal, interest, taxes, insurance. I know if 1,000 of it is PITI, or is P&I, 800 is going towards interest, 200 is going towards principal. I have to factor out what is that prepaid interest, and depending on which day of the week you close, or day of the month you close, will determine how many days of interest you pay. It's called prepaid interest. So if you close on the 30th of the month, and the 30th is the last day, then you pay 1 day. If you close on the 15th, you pay 15 days. Look, prepaid interest, it's 6 one way, half a dozen the other. I know, and I'll leave it at this, mortgage payments are always, always, always due on the 1st. I don't care if you bought your house February 1st or February 26th. Your payment is due the 1st of the month, but it's not the 1st month actually. If you buy a house in February, your first payment's not until April. You buy a home in April, June, yep, and it's the 1st. So if you bought your home the middle of the month, bad news, you're paying 15 days of interest at closing. Good news, you're going 6 weeks before your first mortgage payment's due. If you bought your home, if you closed on your mortgage and bought your home on the 30th of the month, good news, only 1 day of interest. Bad news, your first payment's in 30 days. It's not a cost because it's 6 one way, half dozen the other. You're paying that money. But part of someone's closing cost is prepaid interest, and I didn't put it on the board. So let me just write prepaid interest right here. So at the end of the day, when you're trying to figure out how much money do I have to bring to closing, if you're the consumer, how much money does my borrower have to bring to closing if you're the advisor, you're gonna have down payment plus closing costs plus prepaids minus any money already given. So if you gave the seller a deposit, an escrow reserve, by the way, the term escrow is a universal generic term.
Now I know.
Yeah. So we call these escrow reserves, but they also gave a escrow deposit. If you don't want to confuse it, call it an earnest money deposit or security deposit. But when you're trying to figure out what's your cash to close, I have my down payment, I have my closing costs, I have my prepaid items. Add all those together. Now, what are my credits? Beth collected $500 from me when she made my application to go towards the appraisal. I'm going to get that $500 refunded to me at closing. I gave the seller $2,000 or $5,000 or $10,000 as a deposit on the sales contract. I get that back. So add down payment, closing costs, prepaids, subtract out any type of deposit already given, any type of, another deposit, deposits given. Whatever's left, that's what you owe. Typically in form of a wire. Title comes with that money wired. No personal checks, do not show up with a suitcase full of cash. It's gonna be a wire. If you're lucky, someone will let you do a cashier's check. Ta-da!
Thank
That was
you.
good.